Paul D'Abruzzo. Welcome to the Build to Rent Network. How you doing, man?
Very good. I put some pressure on you to pronounce my name right, and you got it.
I always get nervous about it. I'm happy you did a good job. So one of the reasons I wanted to talk to you is because you do a little bit of everything. You're all over the map, but you're also really big on mindset. So I want to dive into the mindset. And we're currently in a market where there's some challenges, some headwinds, and you have to have the right mentality, go through all of the obstacles, because there will eventually be a huge breakthrough and you have to sit through it to get that breakthrough. But before we dive into all of that, I have a lot of titles I can call you by: investor, developer, coach, mentor, public speaker. How do you describe what you do and who you are?
I mean, to keep it easy, I normally say I'm a professional investor. That's just what I do, right? And that might encompass development properties, regular rentals, short-term rentals, all kinds of things like that.
Yeah, and you're currently very active in Canada. You have a large investor network there. You're looking at the US now, doing some deals currently in Detroit, and you're looking to expand elsewhere. There's a lot of moves that you're making. Can you walk me through what's kind of making you not settle on what worked for you in the past and what keeps you going to find the next opportunity?
Well, I mean, I would love to keep doing the same thing over and over again forever if it worked, but that's just not the way markets go, right? You kind of have to reinvent yourself and your strategy when the market dictates, right? So, like Florida, my province in Ontario went through something similar in a bit of a market correction as rates went up a few years ago very quickly, and we haven't settled through that. We're still in this limbo stage where there's some good deals, there's some bad deals. People are kind of getting out of their deals, wanting to get out of their deals. Some deals are falling apart, and the market still hasn't found its footing yet. So as a professional investor, again, it's my job to weed through all the things that are going on and continue to make money. I can't just say to my wife and kids, "Hey, market sucks, no food today." It just doesn't work like that. I don't have a paycheck. And I work with a lot of investors, and we coach, we advise, we're realtors, but we don't lead with, "Hey, we're realtors." I mean, everyone's a realtor. Realtors are a dime a dozen. Not my favorite title, to be honest, but we're advisors. So people rely on us to give them good advice on how to structure the real estate investments based on what's going on in the marketplace. So if I can do it for me, that means I can advise Alvin and Joe and Mary and everybody else too. Does that make sense?
Yeah, absolutely. One of my biggest pet peeves is when a real estate agent says, "Oh, this is a great deal. This would be great for an investor." And like, great, why don't you buy it?
Yeah.
Right? If it's such a great deal, why didn't you take it? And it speaks to the mindset. I also hate the term real estate agent. There's too many of them. They're too generic, and most of them aren't actively doing what you're looking for them to do for you. And so it's also super important to stay fresh. So for example, I started out rehabbing properties and I use flips to basically pay off all my student debt, become financially independent. That doesn't work in today's market, right? The idea that you're going to flip a property and going to sell it for more, it just doesn't work. So now you have to pivot and figure something else out.
Correct. And that's where we are. It's just one pivot after another until we find a place in the market that's settled where we can adopt a strategy we can keep reusing over and over again. And that would be the ultimate goal, right?
Yeah. Another title that I can give you is philosopher, and you're actually famous for a couple of quotes. So I pulled three of them. And I actually wanted you to expand on each of these quotes. One of them is that your freedom comes from first accepting responsibility. What does that mean?
It means, I remember back in the day reading, what was the book called? Stephen Covey's book. It's on here somewhere. Can't even see it. But in that book, he described responsibility, but kind of broke down the word. If you were to think about it, response/ability, your ability to respond. And when I heard that, I was like, wow, like what a powerful word, right? So your ability to respond in the marketplace, given the current conditions, I think makes or breaks you as an investor, because you cannot control what the Fed or Kevin Warsh or Trump's going to do to interest rates. It's completely outside of your control. All you can control is what your next move and what you do with your current asset base and your portfolio. So instead of looking at my own portfolio as an investor, I like to wear the asset manager hat. I'm an asset manager, non-emotional. And I have to have the ability to respond in order to be successful. Make sense?
Absolutely. And a big part of it isn't like a pursuit of just your happiness or what you think you find joy. You find joy in the role that you play, right? So it's a responsibility. You have a duty to yourself, to your family, to everyone who's relying on you to produce. And sometimes it requires things you don't want to do. Again, I didn't like doing rehabs, but that was the opportunity at that moment. So I did it, right? It's the most logical thing to do. And it had the biggest payoff. And so a part of you, what you're saying is you have to constantly figure out what that next thing is, that thing that's going to have that biggest leverage point for you.
Yeah, right. And I'll repeat it again. Like it's been a game of pivot after repivot. You're pivoting more times than you want to in recent years, and that's not something I want to do. It's because we kind of have to. We have no choice, right?
Another one of your famous quotes is no one's going to save you. Now, this is ironic because you were a former firefighter and now you're saying to people, hey, no one's going to save you. What message are you conveying when you say that?
Well, yeah, in reference to your financial health, yeah, nobody's coming to save you. There's no 911 for I can't pay the bills, right? So if you're having a heart attack or the house is on fire, definitely call 911. But yeah, when you're struggling financially, you're living paycheck to paycheck, there is no emergency button. So you're on your own there. No one's coming to save you. You know, as much as I become a man I've become more of a man of faith in recent years. Not even the Bible is going to save you. Like, if you need help and you need help now, you're the man or you're the woman. It's gonna the buck stops with you, and you're gonna have to do something to get it done. So if you adopt that mindset, you take a deep breath and you stop blaming and worrying about what's going on. You're like, okay, what can I do like right now? Like, what's the next 4 steps I have to do today to like get my next deal or get enough money or qualify for the next mortgage or whatever the major goal is. That really puts things into focus and cuts out all the noise. Make sense?
Yeah, a lot of people also think about like, oh, the government's going to bail me out, or in the U.S. we have Social Security, all these other governmental programs, or sometimes even just your 401k that you're going to work for 40 years, 60 years, and then you're going to have a retirement at the end of it. And it's like you don't know what the market's going to be at that time period. You don't know what your health is going to provide for you. So a part of you needs to shore up your own financial wealth as soon as possible. And also, you don't know if there's going to be an illness in your family that you have to find a way to resolve. And it's one of the things like people who tell me that, you know what, Alvin, I don't care that much about money. You're like, cool. But when you're sick, you want to have options, don't you? If you have an ability to bless someone or help someone else out, you want to be able to do that. You also don't want to be a burden on society, on burden on others, especially as a man. You don't want to play that role in society because no one has any sympathy for a man. Like nobody, no one's going to save a man, right? The
Absolutely.
child, the woman, for sure. Everybody would rise up and help them. A man, no, that's all on you. It's going to be 100% your responsibility.
Yeah, I think that line's a cop out, to be honest with you, because, that's an emotional answer. And the reality is money's just a tool. It's a tool in the toolbox. Either you have it or you don't. And if you have it, you just have more options. It doesn't make you a better person. It doesn't make you a worse person. It might make you more of who you already are if you have more money. But having more tools in the toolbox in our North American lifestyle in this day and age, regardless of your idealism or what you think it should be, is a very necessary tool. That's point blank facts. Nothing you can do about it. So you're going to have to figure it out one way or the other.
Another famous quote of yours, and this is the third one, probably my favorite one, is to think about who you will become. Right. So you should ask yourself, who should I become? What are you trying to have the person think about when they ask themselves that question?
Yeah, and you can imagine I've been doing this for 17 years, so I've had probably thousands of conversations with investors of all different levels, and especially, newer people getting into the game. Their eyes are wide and I want to do all these things and I want to own 10 houses and cash flow $1,000 per house. So I have $10,000 a month in cash flow and I can retire. I'm like, well, good, great. That's an amazing place to want to get to. I mean, the road's going to be bumpy, but the real question is, who's the person you have to become in order to be able to support that goal? Like, are you organized? Like, can you manage your own money right now? Can you even qualify for a mortgage? Like what kind of person do you need? What's missing in your personality? What's missing in your set of tools that will allow you to kind of get there? And it's like one of those questions where you see people go, the point of financial freedom is, I bet if you track that, you can track the money easily, but I bet you could also track all the personal growth you've had along the way too. Because there's no way you get to any of that to get to that place without the personal growth also. So that's what it really means.
Yeah, there's 2 points about that that I really like. A part of it is analyzing like, "Hey, what habits do I have to implement in my life? Like, what are just the habits I do?" Because it's not so much about the goal, but like, what habits do I need to have to accomplish that goal? And second leads to identity. Like, who are you? Like, and one of the classic quotes is I think this is from Tony Robbins, if you ask somebody if they want to smoke and someone says, what flavor? Like, well, I mean, they're more likely to smoke. But if someone just replies like, hey, I'm not a smoker, that's an identity shift, which is like, I'm not like on the verge of smoking again. This is not, oh, I'm a former, no, I am not a smoker. Like, that ends it, right? So it's looking at yourself like, what are the non-negotiables? What are the things that make you who you are? And what are you not willing to give up?
Yeah, and most people who set on that journey, like you're going to have to make sacrifices in your personal life. But people are not willing to do that to get to where they go, and that's why there's so few who ever get to that financial freedom point, right? But I think our job is to take as many people as we can along the road with us.
And it's huge. Real estate is so incredibly powerful, but the most power comes from with time. Like even if you got a property and you got a 50K price reduction and you got it, that's cool. But the real wealth happens over a period of time. So it's the wealth building mechanism. And so part of that has to deal with going through a lot of national headlines, a lot of scare tactics, a lot of like, if you stay glued to the news of the day, there's going to be a lot of reasons that make you want to panic sell. And that's when you'll lose all the equity you created. That's when you will lose all the long-term benefits you would create. The best thing to do is to sit, write it out, remind yourself as to why you bought the property, and really have a sound understanding of all the wealth building qualities that it has. We're currently seeing a trend where a lot of famous YouTubers, including Graham Stephan, are talking about the regrets in real estate, and also privately, even with investors that I've spoken to, are at the point where they're, you know, we're not going to be in a market where rents are going to shoot up like they did a couple of years ago. They're not going to appreciate as rapidly. We're probably going to have more moderate, slow growth moving forward to at least the next 3 years. And then I'm predicting there will be a huge boom as a lot of the new builds gets absorbed by the marketplace. If you were talking to an investor who has a cash flowing property and otherwise doing well, they're just a little bit bored by their portfolio, what would you recommend to them?
Well, it's a conundrum for me. I mean, I was there once when I was, younger and less experienced too. But I think every property has become purposeful to me. It's not about. I mean, it's supposed to be boring. Like you're investing in real estate. We're not at the casino. Like, the best analogy I ever heard was investing in real estate should be like putting 10 cents in a slot machine and having 11 cents come back out. How long would you sit there? You sit there until your head bangs off the machine and you fall asleep, right? But the reality is, if it's boring to you and you're thinking about selling, then you probably don't know why you have that property in the first place. There's probably no end goal attached to it. Maybe it was retiring from your job. Maybe it was becoming a full-time investor. Maybe it was, having enough properties and cash flow to allow your wife to stay home from work. Whatever it was, you probably don't have a strong enough goal attached to it. And once you do have that goal, maybe you figure out that property isn't going to get you toward there in the fastest way possible. So if you lead with intention and you always know what your portfolio is supposed to do for you, what that actual outcome is, then deciding whether to keep a property or what property to add or what property to buy, I think becomes a very easy equation. It either gets you toward that goal or it simply does not.
Yeah, I like to look at it from a very mathematical perspective, where if you have a certain goal, like a common goal for an investor, say, hey, I want to have 20 properties in the next 5 years. Cool. That's a very reasonable goal to have. And so when you look at that math problem, that means every single year you have to be either adding or multiplying to your portfolio. So it does make sense if you sell one, do a 1031 exchange. I don't know what they call it in Canada, but it's a 1031 exchange here in the US. You sell a single family home for a quadplex. Great. That's multiplying. That makes sense, right? If you say, hey, every year or every quarter, I'm going to buy another property. Great. That's adding. cool. But you don't want to get into trading where you're just trading a single family for a single family, or you don't want to get into simply subtraction, which is just selling a property just because you don't like the performance. It's like, no, the whole goal is to keep growing. And what happens over time as well is your cash flow starts to go up, and it's a slow, quiet growth because most of your expenses are going to stay fixed. They're going to be about the same. But as the rental rates go up, you're going to be in a much healthier cash flow position as time goes on.
I agree with you. I mean, that's why I think it's always good to be part of networks, real estate networks, and be working with people, or at least talking to people who have access to people who are 3 to 5 years or 5 to 10 years ahead of you when you're investing, because they're going to be able to provide you that kind of perspective that you never had before. You know what I mean? And I've been doing this for 17 years, and I still have people that I talk to who are ahead of me, and they see things in a way that I can't almost comprehend yet. And then I think back, it'll 3 or 4 years will go by, and then I'll think back to that conversation. I'm like, he was right. I didn't get it then, but I get it now. Right? So if you're out there and you're alone, that's a bad place to be as an investor. Find a network.
Yeah. And I think another big part of it is don't just have like one source of knowledge. Always gather sources from a lot of different areas and figure out what's true for you, figure out what works for you, figure out what you can commit to. Like I'll have someone like my sister who will reach out to me and say, "Hey, Alvin, what should I buy?" And it's like, okay, one, let's sit, let's have a meeting, let's like talk about this. It's like, no, I don't want to do that. It's like, dude, this is not for you then. Like, if you're just, like real estate is not an impulse buy. And then, cause you're going to then freak out at the wrong time. You have to know the building qualities of wealth in real estate. That's how you're going to sit things through, write things out, and go through those, go receive all the benefits that the market has to offer to you. Speaking of which, like Brandon Turner, which famous for Bigger Pockets, he, was a successful investor, went to Hawaii, then ended up going into syndication around the time period of COVID. And I think, like, again, not to knock on Brandon Turner, but this is something that we're seeing industry wide. When the market was good, it was easy for everyone, right? When appreciation going up 20%, you can throw money at anything and you're a genius. And so what happens is a lot of people run out of capital. And when they run out of capital, they start asking other people from capital. And one of the problems of just looking up to a single source as your source of knowledge is that you think that they're God. You think that they have a Midas touch. You start overly admiring this person. And instead, you should stay true to the fundamentals, actually realize that swings happen up and down, but consistently they will go up over time if you can hold on to the asset, which is why I think it's so important to have as much fixed debt as possible. You can have fixed debt, you're going to be comfortable, you're going to know your numbers, and you can then survive whatever challenges happens. Speaking of which, Canada doesn't have fixed rate mortgages, right?
Yeah, they do.
They do. Okay. I don't know where I knew that from, but
less term. So you guys can get like a 30-year fixed rate, where our fixed rates are typically 5 years, and then you're renegotiating.
Yeah. So being an American and so far only investing in the US, from my side, I only see concerns when I think about investing in Canada. I don't see any upsides. The government seems to be difficult to work with, very, very tenant oriented. There seems to be more migration, population growing, but not really a lot of permits, or not really easy to build. They're very restrictive on the land use and things like that. And then also, taxes are difficult. And you have a very expensive price to rent ratio as well, from what I observed. Am I wrong on that, or is that fairly accurate?
No, it's fairly accurate. See, I got started 17 years ago when those things you're describing weren't an issue. So I kind of grew with that market, and as it became more expensive, it's kind of good for me, right? But for someone who's trying to start out now, yeah, it's infinitely more difficult. But and not that I'm defending Canada in any way, we have our problems, and I'll say it because it's true. A lot of people, entrepreneurs especially, people like me, are leaving Canada to the US, and the reason is because of numbers, plain and simple. We'll leave politics out of this discussion. But yeah, all those things you mentioned are true. But I'll say that other people's problems are smart investors' opportunity too. And I'll give you just one example, just for conversation's sake for your listeners. You said it's hard to build. It is. But that's an opportunity for me because I know how to build, and I can stick it out a little bit longer. So when the permit and when the permission to build and the building permit is difficult, it means getting that permit's extremely valuable. So I can buy a piece of land. I'm just making up numbers here for 200. And by the time I have the site plan approved and the building permit, it's now worth 350 to 400. Right now, the land's improved because I got permission, but that permit's so hard to get that it shoots it up in value. Right. So that's kind of what I mean. But not everybody, the average investor can't just wake up and do that kind of stuff. You need years of experience and a lot of capital behind you. And I don't say that to make myself look like I'm something special or anything. It's just the truth of what it is. So, leading from that comment you made, it's true. And that's why a lot of people who are just getting started here in the greater Toronto area, Ontario, and who are looking for more cash flow, that's why they've been looking toward the US at cheaper properties that make a lot more sense from a cash flow basis. And, lately we've established a relationship with some gentlemen in Detroit who've been buying some of the, rundown properties in the greater city area, fixing them, turning them over, getting Section 8 tenants in there and selling them as turnkey investments. And our investors are getting a clean, renovated single family home in a decent area of Detroit, like those B plus neighborhoods. And they're getting 1% rule on cash flow.
Nice.
And it's like, it's really hard to say no. It's like, wow, why would I, right? For 120 grand or 130 grand, 140 grand, get like a nice house. Like it's a no brainer. So that's kind of what we've been focusing on. And your whole Canada comment kind of led me toward that, right? People are going to go where their money treats them best, where the market treats them the best. Right. I think you see that too with all your build to rent stuff in different states, right?
Yeah, a lot of it is figuring out, and that's a good point. A lot of it is your philosophy when you're building your portfolio. So like for me personally, I look at my portfolio as like the adventures where all of the characters have their own specialty. They all bring something to the table. So I've been investing in a lot of appreciating markets. We're now at a time period where markets aren't going to appreciate that much. So because I already have enough assets in that appreciating market, I don't have to keep investing there. Appreciation, I'm going to be covered there. The part that I want more of is just more cash flow, right? So I just want more of my dollars coming back to me, right? That's the main goal. And so when I look to balance out my portfolio, I'm going to be in a maybe more sleepy market that's not going to see the same appreciation, but my costs are going to be a lot lower to build there and the rents are going to be solid. That's why, to your point, is like now is a great time to be focusing on that workforce housing, is not to be aiming for really high rents. Instead, focus on the rents where most people can afford because they're going to have the most consistent demand. Whenever you reach for high end rent prices, is you may or may not get that, but that range is much wider. Whenever you're aiming for more affordable rents, you're pretty much going to nail those rents exactly where you projected them to be at.
Yeah, I completely agree, and that's kind of what we're doing, even with the investments we currently have here in Canada and in Southern Ontario. We're building apartment buildings. I'd love to build single family homes and sell them, but there's no margin. So we've shifted to building apartment buildings and renting them out because people still need workforce housing. And even if the market absorption on rentals is balanced, if I put a new 6-unit, 8-unit, 10-unit building in a neighborhood, I end up sucking away tenants from all the crappy properties, right? And they're willing to pay $100 or $200 more for my brand new nice unit with laundry and a private entrance and air conditioning, heating, all the kind of stuff, right? So it works. So that's kind of the market we're in. It's kind of boring, but it works. And back to the slot machine example, like you just keep doing deals and you're covered, right?
Yeah, absolutely. So where are these apartment buildings located?
The ones I'm building, they're more in the Niagara region. So if anyone has heard of Niagara Falls, like in that general area outside of Toronto. Toronto's super expensive. So if people don't know anything about Canada, I don't blame you. But think of Ontario, the province, similar to it's our New York, right? Like that's our New York state. It's the most expensive, the highest income earning people, all the financial centers there, biggest glut of populations there. That's where most new immigrants are coming. You know what I mean? So trying to do deals in the center of Toronto, although it would be great, is like it just doesn't make sense. The barrier of entry is millions and millions of dollars. It's crazy. So we're outside in the secondary markets around. that are still growing nicely, and the deals are much more palatable for cash flow.
How do you typically structure those deals? Is that more of a build for sale model where you're getting the financing and you're selling it off? Or is that more of a buy and hold? Walk me through
We're
that.
we're buying and holding them. Like to buy, I mean, I don't know if you've built anything more than like the side by sides, but like I feel once you're building 6, 8, 10 units, it's like why would I want to sell this? Like you're gonna have to pay me a lot of money and it's not going to cash flow anymore for me to sell it. I might as well just keep it and add it to, as you say, the cash flow side of my portfolio and just leave it there. And when the appreciation market comes back, I'll do some deals and get some properties that make sense for that.
That's a very good point. It's almost more valuable for you than it would be for whoever's going to buy it. So you'd have you would have to sell it for less than what you would pay for it. So
Yeah,
for
and
that,
interest rates are high, right? So like it squeezes the margin on the cap rate. So if interest rates come back down and the cap rates shrink again, then my margin goes back up. Then I could sell an apartment. I could sell a 10 unit to build a 20, right? But for now, no, not going to happen.
yeah. So right now you're currently exploring the U.S. It's kind of part of a multi-year journey that you have. But when you look at the country of the U.S., what do you analyze? What do you look? How do you figure out because basically the whole country opens up to you. Once you say you're moving to, you're looking at investing in the U.S., the entire country opens up from L.A. all the way to New York. What do you look for? How do you determine what's a good market? What's worth your time?
Yeah, the Detroit thing came along because it's 3 hours from our border, like where we are. So that proximity thing really helps some of our investors get over the concept of literally investing in another country, right? But if you were developing a longer term strategy, like typically we're very favorable of a Florida and especially a Texas because they're southern states, they're consistent, they're stable. The tax system is excellent, and the prospects for business now and business in the future is positive, right? So if you're going to go there and say, hey, I want to slowly build up a $2 million portfolio, like you're going to do it in a place like that, one of the southern states that are, tax friendly. Right. That's kind of what's on our radar. If that makes any sense.
As a local investor, there's obviously a lot more nuance. I mean, you want to care all the details about the street, what's across the street, how close are you to the main road, what's the local school. You care about those details as local investors. International, they're much more visionaries. They care more about like, hey, tell me the story of this region. And that's what they're investing in. And in a lot of ways, surprisingly, I've sold more in certain markets to out of state investors than even local investors. Local investors are like, they're too close to the tree, right? They don't see the forest. They're aware of like, oh, I don't like the way that they didn't build sidewalks on this street. They should have done this. Like all this, like that's too local.
Stuff that doesn't matter. Yeah.
You're missing everything else that's happening.
Yeah, as if when you're international, and I have several international properties, you almost force yourself to only focus on the things that matter, like whether the house has a lemon tree or not is like completely irrelevant. Yeah, I can see that. Yeah, man.
Yeah, cool. Well, Paul, thank you so much for your time.
Appreciate it.
Yeah, absolutely. Thanks again, Paul. Have a good one.